Now, it seems like Trump has just got a victory. So, the Ukraine Prime Minister Zelensky just announced that they have done a historic minerals deal that he deemed as an equal partnership with the United States. And of course, right now, the Trump administration is really happy about this. Now, what are the details of this minerals deal? We can see why Zelensky really loves this deal because number one, he does not have to reimburse the US anymore for all the military aid. And in fact, future military assistance to Ukraine will count as part of US investment into a joint reconstruction investment fund that will be poured into the Ukraine natural resources, which is mining for rare earth materials. Why is this deal such an important one for Trump? Because for all these rare earth minerals, it is crucial to the EV, green technology, and even weapon system in the United States. So looking at the map, you can see that Ukraine actually has about 22 of the 50 minerals that are listed critical by the US. And interestingly, some of them actually is within the Russian control area. So it'll be interesting to see if this deal includes the minerals deposit in those areas and how is it going to be discussed with Russia. But this mineral deal will not save US from the embargo from China because the majority of the rare earth minerals are actually residing within China. Even if they were to get all the other rare earth minerals from the rest of the world, they may not be able to replace what China is withholding from them. And why is China such a big giant in the rare earth minerals industry? Because of long-term planning. Now, back in 1987, then Chinese President Deng Xiaoping already said the Middle East has oil, but China has rare earth. So this has been a development of mining rare earth from China since the 1987. It has been such a long duration, and it is really hard for other nations to be a competitor and even produce at an amount that is close to what China is producing. At the same time, Scott Bassett is continuously pressuring the Federal Reserve, saying that they need to cut the rates. And this time around, he's giving the reason that the 2-year Treasury yield is below the Fed rate. So therefore, the market is signaling the Federal Reserve to cut the rates. But I think this is probably Scott Bassett worrying about the market not doing so well because we just saw some GDP contraction happening in the first quarter. But the good news is that we finally have some response from China that trade talks are actually ongoing. Okay, so this is not yet from the official channel, but it is from an affiliated Weibo blog, right? That is written here in Mandarin. Now, if it translates to this, it says the US has proactively reached out to China through multiple channels, hoping to hold discussion on tariff issues. We are finally seeing a glimmer of hope that both nations are coming to sit down and have trade talks. And this sent the US stock market rising. And this is basically close to a 6 consecutive days of US stock market increasing. Now, you might be wondering, why is the stock market reacting so positively when the US economy shrank 0.3% in the first quarter? Now, because the 0.3% is due to a surge in imports. So in last quarter, imports actually soared by 41%, causing the GDP to drop because GDP actually improves when there are more export versus imports. And if you look at this chart, if you were to take away the net trade, actually the US GDP growth would be closer to 3%, maybe even 4%. Another good news that comes in was the US core PCE inflation, which actually softened to 2.6% versus a 3% increase in February. But I think we need to be careful about these inflation numbers because right now we are not seeing the full impact of the tariff just yet because of the 90-day pause. And should the 90-day pause were to expire sometime in July and there's no resolution from all the trade talks between Trump and Xi Jinping, we will expect these inflation numbers to increase from here. So overall, I don't think the US is out of the woods just yet, but it is good to see that both sides are coming down to discuss, and right now the market is reacting positively. Now, do you think this will be the first steps towards a recovery market? What do you think? I would like to see your comments and hear from you down in the comments below. So if you like the content over here, once again, do like and subscribe, and I'll see you guys next time.